Ford Motors, one of the biggest names in the automobile industry, is currently facing a wave of terrible news that could have significant implications for the company. With rumors swirling and concerns growing, Ford's reputation and future may be at stake. From production issues to financial troubles, the company is struggling to stay afloat in the face of adversity. Unfortunately, the latest round of horrible news could be the final nail in the coffin for Ford Motors. So let's dive into the video to know what that new horrible news is. Here we begin. Ford Motor is set to shake things up in the automobile industry by disclosing the cost of transitioning to electric vehicles. In addition, the company plans to release its financial results by business unit, providing the most detailed look yet by a legacy automaker into the finances behind the EV business. The move is part of a broader effort to reimagine its future and win in a competitive market. Ford's executive team believes that the new format reflects the way they think about and run the business, and investors are eagerly waiting to see how the company's transformation will unfold. Although Wall Street is taking a wait-and-see approach to the changes, Ford is optimistic that its new structure will provide a solid baseline for comparisons as it navigates the transition to electric vehicles. The company will release its revised financial results on Thursday, offering a glimpse into how the new business units would have performed in 2021 and 2022. Ford will report its first quarter results under the new format on May 2nd, with a capital markets day scheduled for May 22nd. As the automobile industry continues to evolve, Ford is betting on its new structure to set it apart from the competition and lead the way into the future. EV losses. Ford Motors CEO Jim Farley is set to reveal the costs of transitioning to electric vehicles, EVs, on Thursday. The company plans to report its financial results by business unit rather than by region, with the new structure including Ford Blue, the traditional internal combustion engine business, Model E, the EV unit, Ford Pro, commercial and government fleet business, Ford Next, non-automotive mobility solutions and future tech, and Ford Credit, financial services subsidiary. This change will give investors and analysts a baseline for comparisons as the company's transformation unfolds. However, according to Wall Street analysts, investors should expect deep losses when it comes to Ford's EV business, like other automakers and EV startups. Ford's Model E is expected to include the company's EV platforms, electronics, batteries, motors, and embedded software and digital experience. Morgan Stanley's Adam Jonas expects the Model E to have negative gross margins of between 10 and 20%, with adjusted EBIT margins of between negative 20 and negative 30%, implying significant losses. Deutsche Bank analyst Emmanuel Rosner believes Ford could be incurring gross losses of about $9,000 per EV sold. The analyst expects Ford to reveal on Thursday that the Model E incurred operating losses of $6 billion in 2022, after accounting for significant research and development investments. Despite Ford's target of achieving an 8% EV EBIT margin by 2026, Rosner believes that the EV business could report much deeper losses than the investors expect. Profit engine. Ford's F-Series pickups have been the automaker's mainstay for over 4 decades, fueling its operations and keeping the company afloat. Despite the recent focus on electric vehicles, EVs, Ford's legacy business is still highly profitable, with Deutsche Bank estimating an EBIT margin of 7.3% for 2022. This is expected to offset last year's EV losses. According to Morgan Stanley's Jonas, the traditional business, Ford Blue, is currently funding the capital-consuming EV business, but this may not be sustainable in the long run. Ford aims to increase its margins by cutting at least $3 billion in structural costs out of the traditional business by mid-decade. The company plans to achieve this by reducing complexity, improving quality, and lowering structural costs over the next 2 to 3 years. Galhotra, head of Ford Blue, stated that nothing is going to be off the table, and the company is committed to making investments with world-class efficiency. What's the news with $3 billion? During a Thursday briefing for investors and analysts, Ford Motor Co. announced that it expects its electric vehicle business unit to suffer a $3 billion loss this year. Still, it remains on track to achieve an 8% pre-tax margin by late 2026. The projected loss is part of the automaker's new financial reporting format, beginning with the first quarter results, which will be announced on May 2nd. Under this new format, Ford will report by business unit for Model E, electric vehicles, Blue, combustion vehicles, and Pro, commercial vehicles and services. Ford projects Model E's 3-year loss from 2021 to 2023 at $6 billion, but the company expects its first generation of EVs, such as the F-150 Lightning and Mustang Mach-E, to be profitable on a pre-tax basis by the end of 2024. Although the projected loss may seem daunting, Ford shares rose by 1.9% to $11.70, indicating investor confidence in the company's plans. What does Ford's chief financial officer have to say? CFO John Lawler said that Ford Motor Co. will no longer report financial results by region, but by business unit to better align with how the company operates. However, the automaker will still provide quarterly and annual sales and market share for its top 6 global markets, including the US, China, and Germany. Last year, Ford lost $600 million in China, broke even in Europe, and earned a modest $400 million profit in South America, with most of its earnings before interest and taxes, $9.2 billion, coming from North America. Ford expects its Ford Pro commercial vehicle business to nearly double pre-tax profit to $6 billion this year, while the traditional Ford Blue business should see a modest increase to $7 billion. The company aims for a 10% adjusted EBIT margin by late 2026. Lawler said that Ford will have the capacity to build 600,000 electric vehicles globally by the end of 2023 and 2 million by late 2026. He added that more than half of those EV sales initially will come from new customers. Ford aims to lower EV battery costs by producing more components in-house and introducing new chemistries in addition to iron phosphate, LFP, and nickel cobalt, NCM. However, while the cost of future EVs may continue to improve, pricing pressure from competitors could offset those gains, Lawler cautioned. Ford Pro surprise? Moreover, recent reports suggest that the company's fleet unit, Ford Pro, may be the most profitable division in 2022, with an estimated EBIT margin of 23.5%. This revelation comes as a pleasant surprise, considering the company's ongoing efforts to enhance its fleet operations through software and services that leverage the latest technologies. Ford's expertise in pickups and transit vans has made it a significant player in the commercial fleet markets of North America and Europe for years. However, the company's recent focus on integrating connectivity and new technologies into its latest vehicles has been a game-changer. Thanks to these technology-enabled offerings, Ford Pro's recent profit margins have been impressive, but the question remains, will they be sustainable? Deutsche Bank's Rossner has expressed concern that Ford Pro's profitability could come under pressure as the segment ramps up vehicles with expensive electric powertrains. Sales of EVs are expected to be a significant part of Ford Pro's business in the coming years as the company introduces additional electric models tailored for its fleet customers. However, this will likely impact the profitability of Ford Pro as Ford's EV production ramps up. For example, only 6,500 of Ford's approximately 105,000 transit vans sold in the US last year were EVs. Despite the potential challenges, Ford Pro CEO Ted Cannis sees fleet electrification as an opportunity for growth. "Our commercial customers are confused about EVs, and they want a lot of help," said Cannis at an Evercore Utilities conference in January. "The key part for us to accelerate the move to electrification is to make it easier." So this is all about another wave of horrible news at Ford. What do you think of this horrible news? Is it horrible, or is it a new strategy that they are applying? Comment below your views and subscribe for more. See you soon.